All right. Well, good morning, everybody out there in internet land. Good to see you all again this week. All right. So today we're going to do stock market review. We're going to focus on the major indexes. We're going to talk also about real estate, and we're going to talk a little bit about Bitcoin, which is correcting right now. All right. Hope everybody's doing good, getting ready for summer out there. Looks to me like we got a couple of economic announcements we're going to go over today. So let me go ahead and get started. I'm going to do a few administrational items first. So let me bring those things up here. And first thing I've got to go over, of course, is to tell you to give us a quick like out there. Apparently that helps our standings with YouTube and a variety of other social media. All right, first thing to talk about seriously, of course, are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. You need to be aware of the risks, though. Always trade with money you can afford to risk, called risk capital. Check with your financial advisor to be sure anything that we discuss here is suitable for you. I don't know your personal situation, obviously. Of course, they certainly should. And then finally, also know how to do risk control, called calculating trade risk on each and every trade, or investment for that matter. So if the trade doesn't work out, the purpose behind that is to know your potential loss going into the trade. That could be a possibility if it doesn't work out. So I have a couple of books on that, and here they are right here on money management that goes into that in great detail. My newest book, The Art of Trading, coming out later this year. All right, is going to be, I think, one of my best books I've ever written. I've written some on Elliott Wave, published by major publishers like McGraw-Hill. And of course, The Art of Trading is published by Wiley Trading. So that's going to be coming out soon, and you can pre-order that. I'll put some links at the bottom. All right, so here are the major economic announcements. Let me just enlarge this a little bit better. Okay, I think that's about the best I can do here. So you can see that. And I'm going to actually go full screen here for a moment. Maybe that'll help a little bit here. And there you go. Let's open that up. Okay, so basically we're going to start out today is May 1st. We got ADP employment out at 8:15. And these, of course, are all Eastern times. And then we've got construction spending, ISM coming out, job openings. And then today at 2 o'clock, there's going to be a little announcement from the FOMC on the interest rate situation going forward with Fed Chair Powell talking at 2:30. All right, so the thing with the interest rates right now is inflation has remained sticky, and the numbers aren't coming in good. And you can look the numbers up on the internet for the actual precise numbers, but basically they're not supporting a rate cut at this time. Out of everybody here, what do you think about that? I mean, do you think we're going to get any rate cuts this year? Or do you think we're looking at one, possibly two? I'd love to get some feedback there if on your thoughts on that. I'll tell you what I think a little bit further along in the discussion today. And then at 5:30 on Wednesday today, we have auto sales. Then we jump tomorrow, Thursday, initial jobless claims. That'll be a good one to watch. Trade deficit, labor costs, factory orders. And then Friday, employment report. Okay, that'll be watched. Hourly wages. Let's see, Chicago Fed president speaks, and the New York Fed president speaks as well. So we've got a lot from the Fed coming out this week. All right, so keep an eye on those. I think the big one, obviously, is today on the FOMC. All right, so this came out earlier in the Wall Street Journal, where Powell basically is kind of preparing everybody that, hey, you know, it doesn't look like we're going to be able to cut rates kind of like as much as we thought, right? And so that created a little bit of an issue with the markets, and we've seen the markets pulling back pretty much ever since. And the data that's come in since then has not been favorable to change this expectation that they're going to dial back rate cuts. As I said, going into this year, you know, they were talking 6, and some people were thinking 7 rate cuts, which seemed really unusually high for me. And I think back then I was saying we'd be lucky if we get 2. Now we're going to be lucky if we get any. All right. We probably will get 1. Don't forget it's an election year. So I think maybe with the markets turning south, real estate sales are, you know, slumping. Prices are remaining high, but there's not much activity out there because of the interest rates. So you may see the Fed try to stabilize this economy in an election year. by cutting rates, even if they don't necessarily think they need to. So we'll kind of keep an eye on that. But I wouldn't be surprised if we get one rate increase before the election. I'd be surprised if we get two. I don't think we're going to get any rate increases, but I'm looking at one, and I'd like to hear what people think out there if you have a different thought on that. All right. Mortgage rates have increased simply because of the fact of the announcement of the rate decreases not coming. So they're kind of getting ready for any possibility that things aren't going to be coming down. It is possible we could get no rate decreases at all. So I think the mortgage companies are hedging their bets here. And so they're keeping rates high. They've increased a little bit. And mortgage, I was looking at something yesterday, and the mortgage units of, the number of new mortgages being processed, it is at like a decade low or something, maybe even 2-decade lows. I think it's even going below COVID or back down to COVID. So it's not good. In other words, people are not refinancing. They're not taking out second mortgages, and they're of course not staying away from first mortgages on purchases simply because of the rates right now and the prices of real estate. So real estate's got a very interesting situation brewing here, and we're going to take a look at some other things about that as well. All right, I do want to cover charts today. You're going to see some of my software being used on that chart. I'm not going to go into great details of what it does. We've got videos on that. You can go to our website, and I'll put some links on the recording you can check out as well. All right, so this is a chart that I put together here on Sunday, and we'll take a look at the live charts. But a couple things I want you to take away from here, which is kind of what we've been talking about now for quite some time. All right, so we're going back here. This is a daily chart. Each price bar here represents a day. Very typical chart that you would see if you opened up a magazine or a newspaper or went on the line, which is probably more appropriate these days to check out charts. So if you go to Yahoo, chances are you'll see this as the primary chart coming up, and it's called a daily chart. Now, in this chart here, I put some numbers on here, and that represents a form of technical analysis called the Elliott Wave. Bottom line, what you need to know for this chart is that there are 5 waves in a trend, and after the 5th wave, the market changes direction. And so this is a bullish wave count I have here. So this is a wave 3, correction is a wave 4, and this is another bullish wave 5. And this is the target zone for the wave 5. Now, statistically, we've come darn close. All right. So a couple things to take into account. Either, possibly the target is off by a small percentage because maybe the lines aren't drawn perfectly accurately. Well, I double checked that to make sure they were. So they're pretty spot on here. So I don't think that's it. But the other statistical probability is sometimes markets don't make it to the target zone, and that happens about 15% of the time. So there's a 15% probability that wave 5 is finished. And notice we did not go into the target zone. So we have to, take that into account a little bit. Now, how do we know if this 15% is the correct number? In other words, is it going to go down? Well, it would have to go at least below the October low, which I'm circling right here. And I'll just put October here. All right. It would have to go below there for us to feel that, hey, this is one of those times when the market's not going to hit the target zone, which normally it does 70% of the time. Let me repeat that, 70% of the time. So, all right. So, it's got a long ways to go down. Got to go almost below 32,000, right, before we see a problem. Okay. All right. So we'll keep that in mind. But now, if you're a probabilities person, that 70% is an important number, because if you play the probabilities, which I do, and in the markets, that's about the best we can do, right, is play the probabilities. All right. So you want to do that most of the time, and you're not always going to be right, but that's the way you do the markets, right? So in any case, I think what we're doing here right now is coming down on a correction that was, honestly, if you ask me, it's long overdue, because we've been going straight up since the October bottom there. And so we're due for a profit-taking correction. So this is no surprise to me, and certainly probably to you, because if you've been coming here often or subscribe to some of our more detailed market analysis, you would certainly realize that we've been predicting this and expecting it for quite some time. So we do expect this to pull down, and it's not over yet. And once it's finished, then we expect it to turn back up and prices back into the wave 5 target zone. So that's the forecast that I am currently sticking with because it has the highest probability. And so when we reach that wave 5 target zone, then we're going to look for a major top at that point and then expect a bear market after that. So if you ask me short term, are we still in a bull market? The answer is yes, that this is a profit-taking pullback in a bull market. And so that's kind of where we are right now. And I'm going to give you a more exact range of where I think this pullback is going to go on my next chart. Any questions on this, feel free to chime in and ask. And the target zone for this wave 5, I don't know if you can see it there at home, so I'm going to tell you what it is 40,281 to about 47,426. So it's a range, and that's a Fibonacci extension range. And that has the 70% of the time that markets top out on a wave 5 in the Fibonacci range. All right, so that's kind of where we're at on that. So the next chart I want to show you, I think, is equally as important because this is kind of basically showing you where the profit-taking pullback zone is. And we've hit it once, okay? And we have some ranges here that we want to watch here. And one of the first ranges here is a low of 37,754.30, which represents a recent pullback area right here. And then up here is an area where the market started moving up and then retraced itself and pulled back. And that was at 38,561.50. So what we want to do is see where we get this type of action this week, or probably maybe even the following week, to see if we get any follow through or remain inside those particular two support and resistance areas. And that's going to indicate to me if we have a bottom in here, because we hit the target zone, and 70% of the time we do that, but we also may go back in and hit it one more time before it goes back up. So we're going to have to wait and see how this plays out on this range that we're in here. This is that distance between here. Now, the profit-taking pullback zone itself, which is the Fibonacci retracement numbers between here and here, is a range between 37,580 and 36,150. All right, so those are the ranges. Now, in terms of an Elliott Wave corrective series, we've got a couple things to look at here. One, this could be an A, B, C, and that certainly is a possibility, which means if that's correct, then the bottom is in and we should head up from here. Now, the other possibility is this is an A, B, and C, and we're heading on down back into the target zone. So that's why these ranges are super important. Now, if we break out above that range, what do we have in place? Well, we have an uptrend in place, higher highs and higher lows. Low 1 here, low 2 here, high 1 here, and a high 2 here. So that would be higher highs and higher lows, and that's the definition of an uptrend. All right, now, could this go into a complex correction? Anything is possible. So we got to get above this point here before we have much more confidence that, right around as confident as you can be that this correction is over. So this will definitely yield a high correction, that the high probability that the correction is done. A pop above here is that wave 5 now will continue. Okay, and we'll go ahead and take out this high here. So we're going to watch that. Okay, and that's the good thing about coming here every week is we'll keep an eye on it. All right, so I wanted to share that chart with you. Any questions on that? We're going to look at the live market in just a moment, but I did want to go over that as well. And then I got a couple other little things to look at here too. All right, so the S&P 500, that's this chart in front of you now, and it has not come as close to the target zone as the Dow. All right, and we do also have a green over here, PTF, like we do on the Dow. And so that indicates higher highs before a major correction. So that's why I'm thinking this pullback again makes sense and kind of also substantiates the fact that we are in a profit-taking pullback at this time only. And same thing with the NASDAQ. And the NASDAQ is nowhere near its corrective area here. So it looks like that's going to correct a little bit more. So I think we have probably some time left on this pullback. I don't necessarily think it's over yet. And that's why I'm a little bit careful on saying that the correction is over, because I don't see that quite being a possibility from a probability standpoint quite yet. All right. And then on Bitcoin, I'm going to show you the large chart on the current chart on Bitcoin. But here was a forming, I don't know if you can see that at home, it's yellow color, pyramid trading point to the downside. Now we have a red owl down here, so we kind of think we're in a major 4 on Bitcoin, and we should, our target on that is around 54,817 down to 43,075. And then after that, we should have another bullish move up. The long-term charts on Bitcoin are bullish. However, we are in a correction in Bitcoin right now, undeniably. And we're coming down probably to that target range between 54,817 to 43,075. So this could be also a great buying opportunity as well if you miss this run up. And for those long-term holders that don't plan to do anything, well, they'll have to hold it through this pullback before it heads on back up. So if you're a trader and you want to trade in and out of it, you'd be out of it already with a buyback philosophy if it gets back into that area. All right, so that is Bitcoin. We're going to look at the live charts on Bitcoin as well. This is the ETF for Bitcoin called GBTC, and it is in a similar configuration as well. So basically, whatever Bitcoin is pretty much going to do, so will GBTC. All right, so that's in a correction too, which leads us to the housing market. Okay, so the Case-Shiller index versus the CPI. I cover this every week and update this chart every week. So the red line here is the Case-Shiller, okay, and the bottom line is the CPI, Consumer Price Index, which is a measure of inflation. So as you can see, the Case-Shiller represents the average, now that's average home prices in the United States in the residential area. So real estate's very local for one thing, all right? If I'm saying, something is bad in one area, it doesn't mean it's bad in all areas. But this is an average. And so as we can see by looking at this graph here, the Case-Shiller has predominantly, if you go all the way back into the 1970s, has always stayed above the CPI to some degree. And that means what? It's a good hedge against inflation. So real estate's always been a very popular investment for especially the middle class because, owning a home is a big deal, a place to live for one thing, for your family, but also it keeps up with inflation. So you're not losing any money of the buying power of that money. And so certainly if you go back and look at this graph, you can see that. Now there's times when the Case-Shiller index gets further away than normal from the CPI. And we saw that during the financial crisis back around 2006 to 2008. And we're seeing it now, all right, during this, I'm not sure what you would call this crisis we're in, but I'll call it a bubble, all right? Because again, look how far the Case-Shiller is away from inflation. And you can see where the CPI ticked up when inflation started kicking in, but so did home prices. And so this is kind of an unusual time period simply because interest rates have come up. And so a lot of people that bought homes during this big rise here got it at very low interest rates. So they're not kind of willing to get out of that financial situation, which is very favorable to them with the low interest rate. So they kind of, the supply went down, right, on housing. When supply goes down, prices go up. Now, the problem is demand is going down because people can't afford housing at this level. And yes, you still have big institutions buying houses and renting them out and things like that. But even then, that forces people to be more renters than buyers at this particular point in time. So this is definitely a bubble. Something's got to give here because in terms of affordability, the next chart I'm going to show you, nobody can afford it. Let me just increase that. So home prices versus income levels, and this was back last summer, and I'm hoping they'll update this soon for this summer, but this is from RE Venture Consulting, okay? So they do a good job on this. And last summer, prices were 31% overvalued, and home prices generally have gone up another, 5%, depending on your area. So now we're getting close to 36%. And even though there was a rise in income at McDonald's, not enough to make homes affordable, right? So in this case here, we're very overpriced to what people can afford. And so there is, another problem in the housing market. And then if we look to debt to income ratio for all home buyers, and this includes things like credit card debt and, things, car debt and things like that, we're at an all-time high here, okay, as well. And so, all these factors affect the affordability of what people can afford to do, because when you go to qualify for a loan, they take this into account. And then total credit card debt, and this is towards the end of 2023 quarter four, was at 1.13 trillion. And look how it took off. All right. It's even higher now from what I hear. So, things are not so rosy in what people can afford at this particular time. And with the higher interest rates, the people are paying a fortune in interest on their credit cards. So not so good. And then on this chart here, this is just kind of an update going into the spring of this year. So this is a little bit more current from RE Venture. And this is basically new listings on the U.S. housing market. So listings have increased. However, okay, with that said, there isn't still enough demand that you're having a lot of transactions out there. And so that can be a problem. And if the new listings, of course, increase dramatically, and they really haven't, but they have increased, of course, that can lower prices as well because supply increases. This is kind of an interesting chart here comparing the different years. So home buyer housing payments plus 12.6% year over year, mortgage payment on a 4-week rolling average median asking price. So basically what they're saying here is that in 2024, which is this area that's unfolding right now, okay, the average price is $2,843 for the average price of a home, okay, at 7.1%. In 2023, you can see it was lower. In 2022, lower. And look at this, 2021. So look at the gap between 2021 and where we are now. And so these people sitting on these mortgages here, all right, really are thinking twice before, hey, do I want to sell my house and buy something bigger at these interest rates and have payments that are going to be much higher than what I'm paying now? Because back in this area, it was $1,500 compared to around $2,800, okay, or $2,750, right around in there, actually $2,850. All right, so that makes a difference, okay? So again, it doesn't mean you're going to have a lot of activity this spring and summer. I think it's going to be a bust in real estate, especially if the rates don't go down. All right, median asking price for a home. So when they did the payments, they used these median asking prices to figure out the payment. So in April 21st of this year, the average home was 415,925, up about 6.7 year over year. So again, real estate's very local. If you go to San Diego, all right, the average price is not 415, it's about $1 million. Okay, so it depends on where you live, of course, but these are averages. And you can certainly see how housing has gone up substantially, just like interest rates. And so when you think about that, that's a double whammy to a home buyer. So that's why you're having a problem of low transactions currently right now. All right, so that's kind of the thing on the real estate. I think something's got to give here, and I think if prices do remain at these levels for a while, it's going to force people to rent. All right, so I want to come out of here now and go into the actual charts here, and we'll take a look at the Dow Jones here. And notice we're still coming down. So I've got 3 charts here. I got the 60-minute chart here. I've got the daily here and the weekly here. So this is our target where I'm thinking prices on the far left-hand side chart of where the Dow is heading before we can expect any type of rebound to the upside. So I'm looking at 37 now, 002 approximately to 35,216. And we're sitting right about 37,867 and some change right now. Okay, so that's kind of where we are. Notice the double pyramids forming here in this bracketed channel that we're kind of in over the last week or so. So if we break below that, then chances are we're going to go ahead and dive on down into that target there. All right, so that's one thing. The other thing I wanted to look at real quick is Bitcoin, because I wanted to see how that was doing today. And as you can see, she's on her way down. So the target here, okay, on Bitcoin for this correction is, this is a 3, this is a 4, and that will be a 5. And if we notice on the far right-hand chart, which is our weekly chart, all right, we're still in wave 3. So there are 5 waves inside a wave 3. So when we get to this 5th wave up here, we'll be at the end of a major 3 here. And then most people are going to want to get out then, because then we're going to go into a substantially fairly long-term correction. So that's kind of where we're at now. And notice how powerful here, all right, the owl is, which is measuring momentum. And we have a green PTF as well. So both of those are extremely bullish. So, and they should remain bullish for the most part until we get to the next major high. So I'm expecting Bitcoin to keep coming on down. And I think this will be a tremendous buying opportunity here. All right. And we'll take a look at that every week. And notice here we've got a red PTF. So you don't want to buy now. Do not buy now. And a fairly strong owl to the downside. So this baby is just getting going. All right. So I think probably, month maybe we'll be down in that target zone. We'll see. Maybe it'll happen sooner. Usually what happens with this is we get a couple of these dramatic price bars. We get some type of pullback, and then we get one more flow down. So that's why it can take a little time. So Bitcoin, keep coming here every week. I wouldn't buy it here. If you're holding it, you got to make sure you can hold it through that correction period that we're in now. If you're going to get out, you should have gotten out. Otherwise, you're a holder here. Okay. All right. So, I mean, you could get out here with the chances of buying it in here. We just don't know where it's going to stop in that target zone. Okay. All right. So that is that. And let's see what else we got here. GBTC will be no different. We'll take a look at that one real quick. All right. There it is, GBTC, also coming down to its correction zone here. All right. So, the interesting thing is, when you look on videos on Bitcoin, there's a lot of talk about halving and, waiting several months before the next big surge up. But, it's all in the charts. All right. Bitcoin is a market, just like IBM, just like Microsoft, just like any of them. So the charts can light the way if you know how to use them, right? All right. So that's kind of where we are there. All right, a couple other little quick things I want to look at. Let's take a look at crude oil here before we go. All right, so this is pulling back into a target zone here. We're actually bullish on oil, I'll say long term. All right, my target on oil is around 100 to 125, but we won't get there until after this goes down. We don't even have a red owl here. So we should have a red owl here. We have red here. So it's pulling back, low of around 76. We're in there now because it's at 76.12 down to about 72. So a little further down. UNG, natural gas. All right, so this is still coming down. All right, and at this particular point, we're looking for some form of bottom, but it's not in there quite yet. But it's got to be getting close. We're starting to see bullish divergence, which means as the market makes new low, the momentum creating that move is not as low as it was in the previous time. So that's bullish, but we don't see a bottom yet, quite yet in it. It's way too early to tell, but we'll keep an eye on that one for you. All right, and then silver, and I'm just putting in the ETFs for these. There's many ways you can take advantage of this. Silver's pulling back, but again, look at that long-term chart here on the OWL and the PTF. So more highs coming. So basically the markets are pulling back, and with silver, we're expecting a pullback range, and we're in it now between 24 and 23, but it's not over yet because our indicators are like the PTF. I love this indicator, is indicating that the bottom's not in yet. So we're probably going to go down again at some point before we put a bottom in here. So, and here's a pennant where we had to bounce out of the pennant, but now we're having a little breath in there, and we should head back up. So I'm pretty confident silver is going to keep going. All right, but it is in a pullback. Let's take a look at gold here. All right, so gold is, look at the chart on the far right. Look at, once again, at our OWL momentum, and here, very bullish. So again, we're pulling back. We got red here. And so after this pullback, we should see more highs in gold. All right, so there you have that. All right, let's do TLT, the bonds, and then we'll wrap it up today. On TLT, again, this roll is rolling over again. We've seen this before. It did it back in here too. So it kind of went up and rolled over. Now we're seeing here. So, is this a bottom? Well, according to this indicator, it's not. All right. So, and this is right 75% of the time. So it's not 100%. So if we get stability before reaching the bottom and a turnaround and get above this high, then that indicator may turn green without a new low. But I got to be honest with you, it's still coming down. So I'm stay out of bonds for a while. Okay, don't touch them right now. Let's wait. All right. So that I think is some of the major ones I wanted to cover today. Don't forget, on Stock Analysis Friday, which is 2 days from now, we will be looking up stocks that you want to bring to that session. It's right on YouTube or LinkedIn or Facebook, wherever you prefer to log in to see us. But that particular day is all about you and stocks you want me to look up for you. All right. Any questions on this? Any thoughts on interest rates? Does anybody have, before we go here, thoughts on interest rates? Alexander, good to see you. Frank, good to see you as well. All right. Again, my feeling on interest rates is maybe one cut, only because it's election year. All right. Kumar says no change. Yeah, I kind of agree with that. At this particular point, I don't think we're going to see much of a change at all this time around. Maybe later in the summer, I don't know. But, this is the ideal buying time coming up between now and July in the housing market. So if they're trying to help the housing market, they got to do it soon. All right. Well, thank you, everybody. All right. And we'll see you back here next Wednesday. All right. And Don't forget, we have the client support session coming up in about 30 minutes for my clients. Whether you bought home study courses or software, you can come to that session. It's absolutely free. Bring your questions. I'll be glad to help you. All right, so I'll put a little music on and we'll go ahead and end this session, and we'll see you next week. Thanks so much.